Welcome to this channel. Today, we're debating whatever options exist in 2022 for properly investing one's money. What money-making opportunities do I have? How can I figure out which investment strategy is best for me? What should you pay special attention to when investing money in times of crisis? How should I manage my investment strategy over time? The year 2021 was a very difficult one for anyone who wanted to invest money to make money. The stock market's evolution is difficult to predict due to the corona crisis. Many courses have been reopened since the Borsen crash in the spring of 2020. What money-making opportunities do I have? You'll discover tips on how to manage your money in the future in the sections below. Uprigens, if you're interested in investing in securities such as stocks or ETFs or mutual funds, you'll need a trading account. If you don't have one yet, we may recommend some affordable options in our depot comparison. Investing money in stocks. Whoever invests in individual stocks should be aware that his or her investment is always a bet on the rising price of that particular stock. This is possible. Actionnaire make quite similar profits with stocks on a regular basis, particularly after a market turbulence such as the corona crisis. Janaso, things can go wrong, and the value of the stock can plummet in a matter of minutes. If all goes wrong, he will not be able to recover and the money would be lost. In this case, the renditørvirkningen are extremely skewed. In general, this means that one should only invest in individual stocks if he or she can also rely on the money set aside there. Anleggen of funds in a trust. Actively managed aktiefonds are referred to as fonds. In most cases, you can buy shares in the company through your home bank. Actively managed funds are overseen by a fund manager, often known as a banker, who keeps a close eye on the market and buys and sells stocks. Depending on whether the fund manager has a good hand or a bad hand, the fund develops positively or negatively. Whoever decides on an actively managed fund should pay close attention to the administrative costs. They can sway dramatically depending on the fund. And the higher the costs, the lower the return on investment for the investor. Those who invest in ETFs have two advantages over those who invest in mutual funds. To begin with, the administrative costs are far lower, leaving more of the value increase available to the investor. On the other hand, they generally do better in terms of value development. ETFs, after all, are based on an index, such as the DAX. When the value of the DAX rises, so does the value of the index. When the DAX falls, the value of the index falls with it. Manager active funds attempt to achieve a better value development than ETFs by actively buying and selling securities. However, they only succeed in doing so on a very rare occasion. Mann also claims that fund managers rarely strike the market. Experts always recommend the MSCI World to anyone who wants to put their money in a broad-based ETF. Investing in real estate. Many experts regard real estate as a relatively risk-free means of accumulating wealth. People will always require a place to live. How appealing real estate is as an investment opportunity is determined in large part by the purchase price, because the ratio of the purchase price to the rental income ultimately determines the yield. However, it is now difficult to predict how real estate prices will develop. Many experts believe they will continue to rise because mortgage rates may remain low for several more years. Other experts believe that the property prices may now fall as well. This could be the case, for example, if a large number of property owners are forced to sell their properties because they are unable to service their mortgages due to a job loss or short-term employment. If you want more tips on how to invest your money this year, subscribe to this channel and give it a like so you don't miss the next video.